So I've had a lot of students, a lot of traders around the world email me recently asking for clarification and guidance as to what the market is doing right now. Not only the Dow Jones Industrial Average, but also the S&P and also the Nasdaq as we move into trading beginning Monday the 6th of October 2014. Like seasons, sometimes the market obviously goes through trending periods, other times it goes through channeling or consolidational periods, and for a very small part of the year also there are very high volatile periods of the trading calendar. What we find ourselves in right now is one of those periods. That is, of course, the high volatility sort of season right now. What we're starting to see is a sentiment shift taking place at resistance. This was highlighted by the false whipsaw, which occurred when we got that shooting star candlestick about 3 weeks ago. Since then, the market has pulled back. It looked to be breaking support, but as at Friday, the market was up 208 points. And as a matter of fact, it's giving us a very nice bullish signal. This is what we call a morning star candlestick reversal pattern. All right, so what this is saying is that, look, short term the market wants to move a little bit higher, but in my opinion, the upside is very, very limited. The reason why is because we have established this numerous times as very, very strong resistance. That number is 17,140. What is also conflicting and why this market is acting so erratic is because a lot of the technical indicators along with sentiment are really conflicting with one another. All I really need to do right now is have a look at the MACD, the RSI and the stochastics, and they are all giving us incredible divergent signals. As you can see, for the month of August versus the month of September, the market made a higher high in mid-September. As you can see on the oscillating indicators, you can see that they all made and established lower highs. This is telling us that the momentum, the trend, the bullish trend which has been in effect, it is starting to slow and it's wanting to change from a bullish primary trend at least into an intermediate pullback down to support levels. Now these levels we have highlighted, 16,511 is the primary target which we have on the Dow Jones Industrial Average. The way it's going to get there is going to be, again, very volatile and very ugly. So when you start seeing these conflicting signals, when you start seeing sell signals and divergent signals, but the market giving you one-day rallies, it's very, very reckless to start going all in or net bullish on the overall market. Personally, I do believe this market wants to move lower. Yes, this is technically a bullish signal. Yes, the market is still resilient. However, sometimes it's best to stay in cash when there is not an overwhelming directional move on the market, when there is not one clear directional move, when sometimes or 90% of the time where it's like, yes, this is what the market is doing. Yes, the market is trending higher. Yes, the market is acting as we expect it to. In that other 10% of the time which we find ourselves in right now, sometimes the best position to be in or the best sort of location to be in is on the sidelines and to not be participating in this wild volatile moves. Sometimes the best position is to simply stay in cash until we start seeing those clear directional movements. Now I've broken this down into our pro analysis class which I do over the weekend. If you want to understand what the market is doing now or how to actually play the market, in other words, not overplay the current hand, what the market is offering at the moment, I do advise people to go and have a look at that class. It is called Pivot Point Pro on our website at pivotpoint-trading.com. All right, and you'll find those classes on our website. All the best, ladies and gentlemen. I wish you a great weekend, and I'll see you all on Monday for a market recap. All the best. Goodbye.